Good afternoon, everyone. This is Henry, and as we get into tonight's video review, I wanted to spend a little bit of time discussing the diamonds with you. So DIA, the ETF for the Dow, has really got an interesting signal here. I like to give traders as a foundation of my trading plan the idea that you can use the squeeze on any time frame and then try to use the 21 EMA as a way of tracking the momentum or the trend of that time frame. And then of course thinking that when the squeeze does fire, it'll provide a nice directional move. Now, a couple of things about the current pattern. I look at this and see from the lifetime high down into the lows that were made last year, the 618 retracement of 337.84. We have gotten well above that. We've had several closes above that level. And for the most part, I look for action above that retracement to lead into external retracements, the first of which would be up here at 392. So I am looking to this for that potential. I'm also looking at the daily squeeze and working to really kind of combine these two time frames. I don't know for sure which way the daily is going to fire, but I do like the potential, or at least something I am watching for, of picking up longer dated calls in the diamonds, looking for that squeeze to fire long. Further on the topic of understanding time frame and understanding outlook, if the Dow is going to move higher, you really need the help of names like Microsoft and Apple. And what I want to be so clear about here is that in names like Microsoft, you have these external retracements, just measurements of previous major swing highs against swing lows, that when they fit into these Fibonacci proportions can often complete a bigger part of the move. So that's to say, the failure in Microsoft at 276 could very well bring you back to 250, but I think that would be a great opportunity to try and pick some up to the long side. When you look at this in Apple, you'll notice it's a very similar relationship where we're looking at the previous swing high against that major swing low. And look at how even on earnings, which can be a very volatile, unknown kind of event, look where you pause right at that Fibonacci proportion. So I'm looking at that thinking the bigger picture, 2-day time frame of the diamonds is looking for higher prices, pullbacks in these names. I'm going to be at least keeping an eye on for the buy, and that'll be a big part of what I try to carry through February. So I hope that's helpful. You guys have a great rest of your evening, and I hope to see you in the rooms tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.